Morning, Dave. Morning, Pasquat. Morning, Money. Justin. Kian. Morning, guys. Steve King. Aaron. You guys should be able to hear me now. I was muted for a moment. Buenos dias. Oh, those arrows. In particular, I don't really focus on them for the bigger time frame, but those arrows are so all of my charts when I go to take an entry, typically they're on a 5-minute chart. And one of the setups that I studied, my entry tactics, I learned from Gil Morales called the 620 setup. And it involves MACD as well. And so these arrows are actually when MACD, when the slower fasting sloping line crosses, or the faster sloping line crosses back through the slower, the 6 period and the 20 period MACD line. And then obviously I have moving averages. So when momentum slows in an area, I get the down arrow. When momentum picks up in an area, I get the up arrow. So, but they are not entry. They are not entry signals at all. But they can be used in kind of in confluence with. They can be used in confluence with a key area and your moving averages to take an entry. Jesus, 1 to 7. Holy sh. How would I add to Sezzle? I wouldn't think too much about PE and all those things, and let it tighten, right? If you bought it properly, meaning you bought it around 75, 76 bucks, just let it go sideways. How does one figure out what market theme is? You figure out market theme by looking at top groups. Let me see if I can how do I do this? me see if I can figure out a really easy way to, yeah, GEV won't let you get in. Yeah, that's what they do. Let me see if I can figure this out for you guys and show you guys another window. You guys can see me there. Share screen, window. Here we go. So, okay. I was actually just doing this. I did a little video yesterday for everybody in the room, kind of going over, a little screener of mine that I like putting together. But a really, really simple way is just go to groups. Okay. And then you're going to go right here to industry. And then you're going to go scroll down. And then obviously you're going to see, this is 1 week. I don't care too much about 1 week because sometimes even the shittiest groups can have 1 week wonders. Yes, I like CrowdStrike. It looks like a cup and handle, but it needs to start going. If it can't get going soon, then I got a problem. But I'll scroll down to 1 month, and then you can even go down a little bit further to 3 month. And these are some of your very best acting groups, right? Aerospace and defense has a zillion names that are acting well. You click on aerospace and defense, right? And look at all the charts it has, right? Tons of them, 7 pages worth. And then we could take it one step further and you can go to all and then start to say, okay, does this company have some accelerating earnings and sales? At least by 20%. You want it to be over the 50 simple moving average. So above, price above, where are you at? Price above 50. And then see how many pages we got. Boom, there you go. Now all of a sudden you get yourself TATT, SKYH, LOAR, BYRN, ERJ. And then maybe you're like, okay, well, I don't care too much about fundamentals. So go any. Obviously, in this strong market, you need it to be above the 200. You need it to be above the 50. Now, how many pages do we have? Four pages with 2, 4, 6, 8, 10, 12 names. So you got like, 48, 50 names here. Not really what I want. So I want to shorten up because you could go group by group, like the best groups in the market. And that's why I was like showing the group yesterday how to make a scanner, because it'll pull up a bunch of great names without you having to do this, right? And then you can go price over $7. Volume, you needed to be trading some kind of volume. Average volume has to have like, at minimum over 100,000. You want stocks only. And then market cap, right? Over 300 million, exclude all the real turds. And now what are we down to? Okay, 3 pages. Much better. And now look at the beauties you're getting. You got Archer, you got ATRO, you got Axon. I mean, some of these things are just gone. Boeing acting really well lately. CW acting awesome lately. And so when you go and you scan some of these stocks, right, back on your charting platform, you're going to say to yourself, man, these things just need some sideways. Well, that's okay, right? Let them build out the sideways. Let them build out the high type flag. And then they might be buyable again, right? HWM, KTOS, KRMN, LOAR. I mean, guys, a bunch of great Rocket Labs on here, right? A bunch of these great tradable stocks that have just been trending higher lately are on here. WWD. And so then you just go, you look at the daily dollar volume. You just look at price action, make sure that it looks healthy. And then that's really it, guys. Wait for them to tighten up. The moving averages are all ascending. They're one of the very best groups in the market. And that's it. Literally that's it. So, and then you can do that for like any sector, right? You can just like pick your favorite sector. And then again, if you want to go and say to yourself, hey, what's going to give this stock some duration kind of a move? Well, then you'll go EPS quarter over quarter, and you want it to be over 20%, over 20%. And all of a sudden that's going to exclude a bunch of names, right? It's going to meet that criteria and it's going to exclude a bunch of names, right? And then you can do the same thing with another group, right? You'll say, okay, that was aerospace and defense, right? These medical distribution names have been on fire lately, right? And so there's another group. And then you'll just look at them literally group by group, 3-month performance, even 1-month performance, right? Semiconductors, they have been on fire, right? AVGO, NVIDIA, CRDO, ALAB, et cetera. So, okay, semiconductors, and then, obviously we don't want any of the small guys. We want 30% quarter over quarter growth, 30%, and then that's going to have one page, right? Has to be over the 200, has to be over the, 50, price above, and there you go. Right. And all of a sudden, you've just gotten yourself down to the stocks that have got the best earnings and sales within the group, that are accelerating, that are in a group that's strengthening, that are above key moving averages. Hopefully that makes sense. All right. Now let me. All right. Yeah, hopefully that makes sense. Yeah. Hood's acting awesome. I owned Hood. What a frustrator. I just got shaken out. Tough. Yeah, there's some great names setting up. I own Crowd already. I own several of those names on your list. But in my opinion, the market needs a little bit of sideways. I hate using the word overbought, but the market could use some sideways. Seriously. Would Pony be considered a pullback buy? Pony just released earnings. So I think it's best to just wait see how earnings react. And then you see this little high here. What is this? 1844. And then the very next day, 1858, effectively a very similar high. You're going to want to start to see this taken out, but we'll see how it reacts on earnings. Also the issue is I wouldn't buy this. Right? It's up 75% from its 50 simple moving average. It's too far gone. Needs more sideways. And if it's going to go without you, then it's just going to go without you. Well, here's the problem, Yannick. You want to, I'm assuming if you have little capital, you get FOMO. You want to be in one thing to the next. Like you see a stock go up 30% and your stock's up 3% on the day. It's like you want to get out of your stock and get into that new one. And trust me, I've been there. But the reality is how do I narrow it down? I would narrow it down by, again, even if you had a $10,000 account, $5,000 account, right? You want to use progressive exposure and you want to be in the best names in the market. Let compounding make this a career for you. Let this career last 10, 20, 30 years for you. Don't think about trying to get rich overnight. If you have a $5,000 account, you should be buying, $500 to $750 positions in stocks in the leading groups with the best setups, using clean stops. Like I get this question all the time, like, Ariel, but when you first started and you made, a few million bucks being a day trader. Yeah, I started in the hottest market ever and I hardly knew shit. And I still became a multimillionaire very quickly because of the market, not because of me. And the reality is that you shouldn't try to gamble the way that I gambled. You should instead say, how do I compound my money for the next 20 years, making 30, 40, 50, 60, 70%, 100%, 200% a year in a really hot environment as a swing trader with very, very little stress very low risk. That's way more important. Like, pull out a compounding calculator and start with your $5,000 and compound at 40% for the next 30 years and tell me where you're at, right? You're very rich. And there's going to be, as soon as you really start to pick things up and understand the market and how it moves and how to buy things and how to size them and how to trail them. And, everybody all of a sudden wants to say, oh, well, I'm just going to be a day trader. And then once I make my $1 million, I'm going to switch to swing trading. Here, let me tell you, that's bullshit. All right. That's bull. When I hear that stuff, it's bullshit. You don't change your trading all of a sudden because you made $1 million. So, morning, Gio. Nice to see you. Hopefully that video was good. With the scanning. I know some people couldn't make it into the stream yesterday, or weren't there on live. So hopefully that video was helpful, even for yourself, and just play with it, honestly. And figuring out, what pulls up, the even better setups. You're getting stopped out of most of the winners these days. Is it common for everybody, or I need to have broader stops? You don't need to have broader stops. You need to have better timing, right? Like, I haven't even bought a stock in the last few days. I literally have not even bought a stock in the last few days because the market's extended, right? The best names in the market have already ran, right? And so we're just waiting for those to set up again, or we're waiting for a crystal clear theme to appear. And we haven't seen a crystal clear theme form this entire time. So not this entire time, right? Because cybersecurity looks really good. Semiconductors look really good. These small caps have been running, but we want, even like the crypto stocks look like maybe they're starting to shape up some more. So that's like kind of the way I would think about it. The very best stock, if you're getting stopped out recently, it's because your situational awareness isn't that great. Like, guys in the room, Gio or Dave, they'll know, I've been preaching, do nothing here. Let the leaders tighten back up, right? Your Palantirs, your Ubers, your Hoods, your Zscalers, your Oktas, your Rubrics, your SEs. I mean, guys, these things have just gone vertical. I didn't include volatility ADR filter in my scans. Any reason? Well, when I'm looking through those charts and then I pull them up into my Thinkorswim, I see the ADR right there. So what I really want to do is I just want to filter. And here's the thing too, Vron. I filtered these stocks that they're up 70% from their lows in 52 weeks. So they have moved quite a bit. They have shown you that they can move quite a bit, right? In terms of volatility, it's got it there already, right? I mean, these stocks are up 80% over their 52-week lows, and some of them have done it very, very quickly. Like Palantir has done that in just a few weeks, right? 6 weeks. Like, I don't need to include more volatility into an already volatile chart, right? I don't need to filter for that. If you understand what I'm trying to say, right? They're up a ton in 52 weeks. It's not up, like GE, 33%, 28%, right? They're just slow moving, whatever, right? And I don't even know that that's true. I think it's up more, but yeah. And it's not even just waiting for the best risk reward areas. It's waiting for the area where the chart gets tight and then you're timing your buy with a market that's pushing higher, right? So that you can allow the stock to work as quickly as you can from your average. Right? Because anybody is comfortable holding a stock that's green. The key is can I get myself into green on the day that I buy it? And that is the most important, right? If you can get yourself into green on the day that you buy it, well, then, watching some green come back on you, no big deal. Yeah, market is ripping about everything right now. Market is ripping. Do you have a target percentage you want to risk, like 3% stop or 4% stop? I don't have an exact every single time, because the determining factor sometimes is just going to be the low of the day, right? Sometimes I'm buying a stock like, when I bought Netflix, for instance, let me give you this example here, right? When I bought Netflix way back here, 2019, right? My stop was low of day. So it's like I'm buying this thing on a 5-minute chart, trying to break out over prior day high, and my stop is literally 1,004. I remember, right? 1.5% on $1,000 stock, right? So I'm taking it. It was like a touch more than a 10% position. What am I risking, right? I'm risking 0.15, 0.2 on my entry with slippage, right? Like literally nothing. And I don't make that determination. The stock on the day that I buy it makes that determination. And then my position sizing makes that determination, right? So how far is my stop to low of day, or maybe even prior low of day? And then, how much position size am I taking, right? Because if I take a 20% position size and I've got a 1.5% stop, right, I'm risking more like 0.3, right? If I take a 40% position, I'm risking more like 0.6, give or take, right? A little bit more than a half of 1% of my portfolio. So, and again, because it's a slower mover, because it's a little bit more of expensive stock, right? 1.5% for Netflix is a pretty big deal. And then again, since the day I bought it, straight up ever since, literally zero headache with Netflix. And that's been kind of this market for the last few weeks. It's been pretty much zero headache with everything. No, I just look at volume itself. And you know what else helps too? Timing it with a market that's actually going higher in a group that's going higher, right? You know how, like, we were just looking at a bunch of aerospace and defense names or gold stocks or whatever. You'll notice that the day you go to buy your stock, it's not the only one moving, right? And that's because institutions can't hide their hand, right? Like if they're buying gold names, they're not just buying your gold name that you're buying right now. They're buying a bunch of others too, right? Like if you're buying, call it KGC, and then all of a sudden AEM's going and AU's going and GFI's going and WPM is going, and they're all pushing higher. Well, that's for a reason. And so that's almost even easier than looking at volume, right? Volume nowadays could be a little bit dirty because of all the options volume, all the options contracts. People buy out of the money calls, and then, market makers are hedging, and then you got all sorts of funny business. But think about things in terms of groups, because I know people, they'll like look at a really, really clean chart pattern and it'll be in a crappy group. And so, it'll look like it's starting to break out over prior day high or over the pivot, and then it'll just fail. And why? Well, because it's in a shitty group and, nobody else is really buying it, or as an example, or you're not timing it up with the market going higher. And then it just ends up being today's a shakeout candle, tomorrow's the day that it goes. So, yeah, looking at groups is even easier. Could almost use an espresso this morning. And FSLR, what a prime example. I was getting people asked if I was a buyer of this thing as it was going back through the 200. And I said no. Well, you bought Tesla, Ariel, going through the 200. Yeah, but the difference is, look at how far this one had to travel just to get back to the 200, 50%, right? And then look at Tesla, for instance, when it was going through the 50. It was tight just underneath, right? It stopped just underneath the 200 to consolidate. It's a big difference. in chart patterns. And when a chart gets above the 200, let it establish itself above the 200. Nope. Do I need the 10 over the 20 on the indices to take a long? Nope. No, I don't. I do want to see the market stop going down, but the reality is that's going to be your best trending environment, right? When all moving averages are aligned. But I started buying stocks, again, I started buying stocks. I don't even know when I bought. Netflix was like the first long that I took, April 22nd. So a month ago. I don't even know what the indexes looked like a month ago. Let's take a peek. It probably was above the 10 over the 20. Nope, actually it wasn't. It was just building a higher low, right? The SPY wasn't even above the 20, or the 10 wasn't above the 20. How do I know there's institutional participation versus retail in a stock? Focus on groups in the top 40. The reason that they're in the top 40 is because there's institutions involved. Yeah, correct, Marco. NVIDIA is actually a breakout over the 200 on volume. Do you think searching short setups at the moment is right behavior? Yeah, Reddit looks ready. Yeah, if the market begins to pull back, when you're doing your scanning, charts like Reddit, people are trying to buy Reddit as some kind of a catch-up trade, when the reality is this thing acts terrible, right? The market's been ripping. A lot of great stocks are at new 52-week highs, right? Look at your Hoods, look at your Palantirs, look at Uber, look at what MSTR has been acting like, look at SE, Zscaler, Okta. I've mentioned these before. Look at all these names, right? They've been acting awesome, right? This Reddit is not a catch-up trade. Reddit is the probably one you go to short when the market starts to pull back. I agree, Armin. What do I think of CEP here? It's speculative. I don't really trade stuff like this. Looks fine, could make a big move, but I don't care. I don't want to deal with headaches over the course of my 30-year career that I probably have left. So I just avoid stuff like this. Cool, it makes the biggest move. They're not for me. Right? I don't need to be in the stocks that make the biggest moves to make millions of dollars every single year. So I remember avoiding Netflix because the market wasn't above the 10 and the 20, still wasn't convinced about the market. A nice lesson for me. Well, here's the reality, Evan. The best stocks in the market go before the market, right? So, this thing had a nice move up on earnings, but the market was actually coming down. So let's take a look at the market, or let's take a look at Netflix really quick. And you could see it on this day. It had earnings and it had already been in a nice uptrend above the 50 and everything, right? And then you even see this big Wednesday, the day on Wednesday, this thing took out that Wednesday's high, a few days later, and the market was still kind of in that range. And then this thing had good earnings, but then whipped all the way back. Why? Well, because let's take a look at the market. All right, let's just look at the NQ, for instance, right? Look at this nasty down day that we had, right? And the ES was no different, right? A super nasty down day, right? The market was like kind of in this downtrend, and you see this Wednesday's high. Netflix was already well above that. So this thing was Netflix when you compare it to the day on Wednesday when everything rocketed higher on 4.9, right? Netflix was able to already be above that Wednesday's high by earnings, and the market didn't get above that Wednesday's high until a week later, right? So Netflix was already showing relative strength well before the market, letting you know it was already, leadership. Right, back up above the 50 on 415 a week before the market didn't get above that Wednesday's high until what would you say, 429 or something? Literally way up here for the market. Right, at this point, this thing's at new all-time highs, basically. Right, so the leadership bucks the market well before anything else. Yeah, correct. Institutions, they either spread money out throughout a bunch of names, or they buy the most liquid names. Well, yeah, you're right, Kenny, and they're not making it easy to own them, and that's why you should have owned them weeks ago when they set up properly, and now that people don't own them, institutions want to own them, and they're not letting anybody in because they just continue to accumulate. Um, when previous rallies left me underexposed, how did I catch up? I didn't force the issue. Right? You can move your portfolio 20, 30% in a really good environment by not forcing the issue, right? Let them tighten up. Don't think that by buying a bunch of laggards, don't think that by buying shitty stocks, don't think that you're going to make up, for lost time. Learn your lesson, understand what you did wrong, do better next time. Let the best charts in the world tighten up. I don't use MACD as an indicator for a buy or a sell signal. I use it on a smaller time frame for, where momentum is slowing up or speeding up, and I try to use them in areas of confluence. Otherwise, I don't use it as a sell signal at all. I use moving averages. Wait for the setup. That's right. That's right, Kenny. Wait for the setup. Yeah, I don't take really starter positions. I take smaller positions because the names maybe move very quickly and we're not in a good market. But otherwise, I don't do like little 2.5% positions of my portfolio. That's just a waste of my life, honestly. If day 3, the stock is still close to your buy point, do you sell a partial anyway or give it a couple more days? I'll at least, what I'll do is I'll still respect my initial stop. But if the stock is really, so here's the caveat, OSMEX. And I think the part that you have to throw in there, otherwise this question is misunderstood. So if on day 3 the stock is still close to my buy point, do you sell a partial anyway or give it a couple more days? Also, if you are up a lot in day 1 to 2, do you take a partial there or still wait for day? Yeah, if I'm going to get a 20% move in 2 days, I'm going to take some off, right? You need to treat it like a business and pay yourself. But if the stock is still near my buy point after 3 days, I think the part that needs to be stated is, how is the market acting? Because if the market's getting crushed for 3 days, and I don't want to use the word crush, but let's say it's down 3.5% in 3 days, and your stock is flat, it's actually showing tons of relative strength. And you want to be patient with that thing. It's a beach ball underwater. It's a rocket when the market's done going lower. But if the market's ripping higher and your stock is still flat, then you need to trim that sucker, right? You need to, or get out of that thing. And I think that that's much more important. It's the what you aren't talking about, right? OSMEX, you have to make sure that you preemptively ask as well and think about, hey, if my stock is flat, but the market's down 3-4%, I'm on to something good here. This stock isn't falling like everything else in the market, right? It's not falling like the market. It's not falling like the other stocks in the market. This thing is just still, 2-3% up above my average, and it's not really coming down, or you're onto something. But if the market's ripping on the flip side of that and your stock is flat, well, then you probably own a dud. So, that will help you. Well, whenever Clement is ready, I'll probably shoot him a message today after market close, and we'll see when he's got a little bit of time. And I would love for him to, hop up here with us and kind of let us know his thoughts, what he's thinking, what he's seeing, and maybe even tell us, how he's executing a few things right now in this environment. So. Yeah, it's okay, Clement, too, to mess up cycles. These, if you're underexposed, or if you don't own a bunch of stocks, or if you sold things too soon, or if you said to yourself things got too extended, or you didn't believe in the rally in the beginning, right? You have to go back and you have to study, and as well as I do, Clement, like if you're a swing trader, you have to use progressive exposure, right? You have to let the market get you involved. And, in a really good environment, that's exactly what the market does. And, I started with Netflix, and then the next day it was Palantir, and then the next day it was Uber and CrowdStrike. And then it's like all of a sudden, by day 5 or 6 of the perceived rally, I had plenty of traction, and I was like, okay. And then here comes Hood, and then here comes Zscaler, and here comes, oh, look at Okta. And, it's just a matter of buying them at that point. So, you're already operating behind traction. I don't do price targets, Will. Price targets don't matter. Let moving averages work. Let moving averages knock you out of the stock. Right? What I would like to do one day is catch a move like ANF. Right? Where you buy the earnings gap up, and then it just works for you right off the bat. And then, it never closes below the 50 until it triples, quadruples. All right? Like, this is what I want to catch. Right? That's what you want to catch. That's every trader's dream. But how do you do that? How do you catch something like that? You let the moving average work. What if you kept a price target of ANF of 40? You're out at 40 and you're kicking yourself in the balls at 140. Like, you're super mad at yourself at 140. So don't do price targets. Let moving averages figure that out for you. Do I hold a position through a 3-week flat base? Depends where I own it from. Like my Netflix, if this thing went sideways for 3 weeks up here, I wouldn't care. As long as it stays above my key move. And really, it's not even my moving average at this point. It's this lower bound, right? So you see these higher lows that it built in here, right here on 5.5 and right here on 5.12. I'm using this 1100 as my stop. And when the 50 catches up to that, I'll be using the 50 simple moving average. So, yeah, no moving average. Like the 20 is not even going to knock me out. It's $1,100 because I'm already trimmed on it. But if it went sideways for 3 weeks, I'm holding through that, right? I'm properly sized. I don't mind letting a, 7% position, 6% position, and just Netflix just do whatever it wants. I have no idea how high this thing's going. All I know is that they could raise prices of Netflix and I'll still pay it. They could raise prices and I'm not going anywhere. Man, Carvana is the most impressive stock I think I've seen in like maybe ever. To make that move down, go all the way to $3 or whatever the hell it was, $3-4, and then we're back at 305. Unbelievable. Am I seeing a theme emerging in quantum names? Yeah, I'm seeing the theme. I just don't like the names, right? They don't make any money, which, by the way, is not a reason to short them either. They're acting best. QBTS is obviously your leader, but this isn't a fresh theme. This is a theme that's been going on for a while. Right. And your time to have bought this, like QBTS, was on earnings day. You had two options. You had earnings day as like a 5-minute opening range break, or you had a high volume close setup right around $10, 1042. Right now, it's at $16. It's not really an emerging. It's a theme that's been going on for a while. So would be hard pressed to call it emerging because it's been around for a while, right? I mean, even look at IONQ. It went from 8 to 50. Hard to say that's an emerging theme. Yeah, 36K revenue. Yeah, it is a joke, but people get in front of that and then they say it's a joke and then they short it, and then all of a sudden, It's just like shorts, some get in, some let each other out, some get in, and then it just becomes a big old squeeze them up until the person who's accumulated finally decides to get out. I don't really, what I like to think about too is like, even when I'm looking at stocks that are trending higher, right? It could even be the quantum stocks, right? I always say to myself, like, I only need 6 to 10 names in my entire portfolio, right? To be fully invested and possibly even on margin, right? 10 names. And so are there 10 better names than these quantum stocks? Not are there 10 faster moving names. Are there 10 better stocks that I would rather be in? Right. And the answer is yes. I can name them off the top of my head. So if that's the case, I just wait for better entries in those. That's all. Or some of them I already own. Right. One of the reasons that stocks end up making really big moves is because of good earnings and sales. Right. They don't need it. They don't need it. Some of the biggest moves happen in companies that don't have earnings and sales. But I just showed you guys a chart of ANF, even a chart of NVIDIA, right? This didn't happen because NVIDIA was some emerging theme in here. This happened because they had awesome earnings and sales, right? You want to catch this, it needs awesome earnings and sales. Is there an EP setup in QBTS? Yeah, there was. Yeah, down here. Right, there was. And there was a halfway decent setup too, guys. This is like a little pivot right here. But I mean, if you feel like you have to own it, buy it. You could have bought it on the gap up. Eight and a half, $9, something like that. It was probably fine. But it's not a setup that I personally need to own. I know some people will take it. I know even one of my favorite traders would take it. Kulamagi would take something like that, but I don't need to. Right? I'll end up making a ton of money in my career without needing to headache myself in these names. You took TMC, the metals company, on 515. 515 is beautiful. That's the exact day you want to have taken this thing. $341 though, you bought too high. You should have been using like a 5-minute opening range break on this thing, or even coming out of this little tight inside hourly candle, 319. You bought 341. You damn near bought the highs of the day. Not saying that, it didn't obviously go on to work, but, the chart was fine. You need to have a better entry tactic in the morning. And then what? And then 615. I'm assuming and add on. I'm assuming you meant 515 or the very next day, maybe 516, 347. I like 347 because it's basically a break over prior day high. Right. So I like that entry. Even if you took it in the afternoon, even better. So I don't mind that entry at all. Your first entry was a little extended, but I mean, it obviously ended up working. So, and it was coming out of a nice setup, but normally when I see something like this and you see a super, super tight day, I like my entries to be right over prior day high, right? So you'd have been having something like 310, 312, right? Something like in here. Yeah, another day to just relax. Is it normal for it to take multiple market cycles for one to get the hang of swing trading? I think, if you really put in the hours to study, you could probably get it in, a 1 or 2 market cycles. But sometimes we have 2 of them in a year. And obviously, if you have somebody there to, help you out and guide you, if you show up to these morning broadcasts every single day, you can figure it out a little bit faster. The advice I'm giving you is the right advice, dude. I promise you. I'm not out here giving you bad advice. And when I make mistakes, I happily share them so that you could learn from them too. But yeah, you could do it in a year, maybe faster. So AS, what you can do if you don't have that high of conviction, wait for a high volume close setup. And I suggest you go and look at Sezzle and Dave and Oddity as good examples of what that looks like. I had HSAI at like 18.5, and I cut it like the very next 2 days later. I bought it on this little gap up, and it just didn't close all that great, but I just held it 'cause my stop was low of day. Very next day it pushed. The very next day it gave it all back, so I just cut it. And I took like a super small. I was like 50-cent loss on like 15K shares, nothing crazy. And, it does look pretty damn good. Now, of course, it's $1 above my average. Funny how that works. More. It's funny. No, I'm not shorting Rigetti right now. Not until the group shows some weakness. All right, guys. Thank you guys all. You guys are the best. I will see you guys again in 23 hours. I got to get ready for stream right now. Again, thank you guys for being here. If you guys have questions, please bring them tomorrow. Happy to answer them. And we will scan and answer a few more questions tomorrow. So please, guys, have a great trading day. And yeah, cheers. Talk to you guys soon.